first question really to ask the panelists was how this year compares to 2022, which was one of the worst years on record for the European fund sector. And actually, a lot of the CEOs were actually quite optimistic about the future. We talked about the high interest rate environment, the high inflationary environment that we're currently living through. But actually, a lot of the panelists saw opportunities going into next year, particularly around their fixed income fund offerings. So a lot of retail investors highly into fixed income funds at the end of this year, and hopefully that will carry on into 2024. There was also a lot of discussion around technology and AI and how that is reshaping the asset management sector. There's a lot of talk around blockchain, tokenization, and how that potentially could revolutionize the distribution landscape. So a lot of focus on where to spend money next year and in the years going ahead. But obviously in this backdrop, there's a pressure on fees and revenues as well. So trying to get that balancing act right was another key trend that we talked about. We also talked a lot about ESG and sustainability, unsurprisingly. So a lot of questions or comments were made around SFDR and the effectiveness of that piece of regulation here in Europe and how that needs to be changed and adapted going forward and enable European asset managers to remain competitive on a global scale. We also talked briefly about the need for scale and building capabilities in the context of M&A activity in Europe. So a lot of firms have been buying up rival firms, whether that's to add scale, expertise or capabilities or to gain access to new markets. So that was another key trend that we focused a lot of attention on. Yeah, so artificial intelligence has really come out of nowhere over the last 12 months. There's been a lot of focus on the potential disruption that AI could pose to this sector, and the CEOs that we spoke to on the panel were very cognizant of that fact. So there's a lot of focus about where money is being spent on technology going forward. One CEO said that they've put tens of millions of dollars behind AI and trying to really figure out how they're going to use this new technology across their business. A lot of the focus so far has been on automating mundane tasks, so whether that's data processing or reading commentary and trying to get sentiment from markets as well. I think going forward, it looks like the CEOs want to identify other areas where AI could potentially disrupt the sector. It's not just about cost savings, it's also about investing in new areas of the business as well. Going along with AI also is this challenge about attracting talent to the sector as well. We had a long discussion about what is the landscape of the asset management sector going to look like given this technological evolution that's taking place at the moment. That will require investment in new people with data science backgrounds, engineering backgrounds, a very different makeup to what the industry is currently used to. So I think the CEOs are very aware that AI will disrupt this sector going forward, and I think they're starting to put money behind a lot of projects. So there's a bit of a mixed reception to active ETFs, which have really taken off in the US market over the last 12 months. I think so far this year, more than 70% of all new ETFs that have been launched in the US market have been of an active nature. And we've also seen a lot of large US asset managers with traditional active funds convert those into an ETF format. And there are various reasons for that. One of them being tax, the other one being the attractiveness of the ETF wrapper. So it's not just for a passive investment approach, is also being used as an active investment vehicle in the US market. In Europe, the wave of active ETF launches has been much slower, and there are various reasons for that. Again, there are not the same tax advantages that there are in the US market. It's a very young and nascent industry in Europe compared to the US, and what normally happens is things take place in the US market, particularly on the ETF side, and then 10 or 15 years later, that gets replicated here in Europe. One interesting point we did discuss was Robeco's approach. So the CEO talked about their launch into the ETF market here in Europe, which is very competitive and is dominated by three main players currently. But what she sees is active ETFs as a way of differentiating their business from the current competition. So ESG came up in the conversation, no surprise, because that's a big focal point for all asset management CEOs. But I think there's a lot of talk around how they can play a role as active managers. So we had a large range of active managers represented on the panel. I think that's one area where active managers can really stand out. There's a lot of talk around active and passive, but active managers see ESG, particularly stewardship and engagement, as a real standout area. We also talked a bit about the need for the net zero goals that need to be reached over the next couple of decades. Again, there's a role and a voice for the industry to play in this. Engagement with companies, setting targets, reducing those emissions over the longer term. So I think active managers, although they get criticised a lot for performance and the inability sometimes to beat benchmarks on a consistent basis, ESG is one of those standout areas where they really think they can make a difference.